We have witnessed how property investment has become a good hedge against inflation, but are all properties a good form of investment, and do all properties fetch higher returns? For that, we often hear our friends or our agents, giving their own opinions and comments. Some say that this property has a very good potential upside because it's located next to an MRT station. This property is in huge demand because it's next to a popular school. Everybody can have their own opinion, their own say. You can say and I can say, but who actually confirm? Now today we are going to show you a detailed data analysis, and I always believe in data and statistics because they tell a tale to how a property has performed over the years. And right now, we are in our episode of Data Stories. Hello everyone, I'm Sean In, and welcome to one of my episodes for Sean In's Real Estate Data Stories and Analysis. And today we are going to zoom right into the topic of, does a strata-titled property have a shelf life? When I talk about shelf life, I'm not referring to the number of remaining lease left in a property, be it a 60-year lease, 99 years, 999 years, or if not a freehold property. What I'm talking about in definition of a shelf life in the Oxford Dictionary, and it says, it is the length of time for which an item remains usable, fit for consumption, or saleable. Now, when we have a deeper understanding of shelf life, it also means that the length of the time that it remains a form of attraction. Does it has an upside potential for our investors and Singaporean homeowners? Now, before I answer that question, we have a very detailed analysis report of how the prices has fared for your property since the day you took over the keys. If you wish to find out more about this report, please do not hesitate to contact me at my mobile number. I'll be more than happy to share with you the report analysis. First and foremost, we need to establish what type of property are you holding on to, whether it is a freehold property or a leasehold property. Now, for a freehold strata-titled property, you begin to understand that you actually own that airspace, that particular airspace above the land for an infinite period of time, and you co-own the land together with the rest of your neighbors. Now, for a leasehold property, yes, you own that specific airspace over a fixed period of time, but you do not own the piece of land that the property is built on. Now, of course, for the leasehold, we understand that it can be a 60-year leasehold, 99-year leasehold, or a 999-year leasehold. Now, let's look at a private property scene, which of course we break down into 99 years, 999 years, and a freehold. But I'm more interested in the 99-year leasehold because there is a shorter expiry date. This is one article which I pulled out from the Straits Times, and in fact, it is the very first estate that has been returned back to the States after the expiry of the lease. In the headline that it says that the Geylang private homes to be returned to the state when the lease expired in year 2020 with no extension that's allowed. And this is an article that was posted 3.5 years ago. And this is the first for the residential property in Singapore, 191 private terrace houses at Geylang Lorong 3, which is having the 60-year lease expiry, and they have been returned to the state for the future development of public housing estates. This is the first time a residential plot of land has reached the end of the lease. Unfortunately, the homeowners in this particular estate did not receive any compensation or any form of a rebate. Basically, when the leasehold has expired, the value of the property has reduced to its zero value. This poses a huge concern for many homeowners like you and me, especially when we are sitting on a leasehold property. And most of the time we ask ourselves whether the leasehold property will have its value when the lease expires. While technically, when the leasehold expires, it has to be returned back to the state for future developments, unless the developer has stepped in to negotiate a deal to buy over the piece of land from the existing homeowners and renew the lease with SLA. That is what we call the en bloc. What we have read from this article is that the 70-year leasehold private houses in Jalan Cempaka Kuning and Puteh that is near to Tanah Merah is the next in line to reach their expiry in 2034. Now, having said that, what is then the shelf life of the leasehold private properties in Singapore? Now, before I answer that question, can I pose you another question and various case studies to help you to better understand a perspective of the different phases a private property will go through, from the developer's launch to the TOP stage, which stands for Temporary Occupation Permit, and to the open market resale period after the various homeowners have received their keys. For example, you bought a 3-bedder apartment at Casamira, which is a 99-year leasehold condominium located in close proximity to Tanah Merah MRT station. You bought it directly from the developer at $789,000 during the launch. Currently, your property is valuated at $1.5 million. The question is, would you choose to sell it for a profit or continue to keep it? There's no right or wrong answer to that question, but it's really according to the individual preference and the current stage where the homeowners are. It could be enjoyment of the facilities and the close proximity to amenities and public transport such as MRT station, or it could be also a close proximity to their workplace or commuting to their children's school. That's why the homeowners, the parents, are holding on to the property before they sell it. But of course, for investors, they are usually looking for the highest potential capital gains in the shortest possible time. Let's take a look at the historical price trend for Casamira. During this launch period in year 2007, the developer launch prices were hovering around $650 to $750 per square foot for the various unit sizes. During the world economic crisis that happened in year 2008 leading to 2009, even upon the TOP stage, there were balance units left unsold in the developer's inventory. And in order for them to clear the stock and create a continual attraction for the consumers out there, the balance units were priced sensitively, and you will notice there wasn't any price increment during the 2-year period. Ever since the nation economic recovery from year 2009 leading to 2013, the prices in Casamira have steadily increased despite the various cooling measures that were introduced along the years. And in the peak period of 2013, the average PSF were transacted around $1,200 to $1,300. I believe that the last straw that broke the camel's back was in year 2013, in which there were 4 tranches of cooling measures that were introduced within the same year. 2 of them were namely the ABSD, which stands for Additional Buyer's Stamp Duty, which was imposed on aspiring Singaporean investors who wish to own the second residential property onwards, and for Singapore PRs who wish to buy their first property in Singapore. TDSR, the total debt servicing ratio of 60% threshold, were pegged against the borrower's or the combined household income, meaning to say that the mortgage servicing or repayment every month should not exceed 60% of their monthly income. These cooling measures were effective enough to cause the property to enter into a market correction, and as a result, the prices have dropped. From year 2014 to year 2020 was the period of stagnation. The average per square foot transacted in Casamira was hovering between $1,000 to $1,150. What is then the shelf life for Casamira? I believe it was after the TOP stage, which is a 3-year period between year 2010 to year 2013, where there is a continual upside potential and a continual attraction for the next batch of buyers and sellability from the homeowners. If I'm an investor who own a property, does it make a difference if I sell my property in year 2014 or year 2017, 2018 or 2020? It does not have a significant impact on my profits. Let's take a look at the price comparison between Casamira and Rendale Park Residences, which is one of the newer developments that just reached its TOP stage in year 2021. This condo development is also located close to Tanah Merah MRT station. Looking at the launch period in year 2017, the average per square foot was transacted around $1,300 to $1,400 per square foot, which is $200 to $300 per square foot higher as compared to the resale prices of Casamira. Gearing towards its TOP stage in year 2021 for Grandeur Park residences, the resale prices were already transacted above $1,500 per square foot. To be exact, it is between $1,600 to $1,700 per square foot on the average. This is way better performance as compared to the stagnation of Casamira. From an investor point of view, if you would have sold your property and exited from Casamira between year 2017 to 2018 and reinvest your profits to purchase a newer property or two properties in a new launch project such as Grandeur Park residences in the same year, despite the price launch at a higher PSF, you will still have enjoyed what we call the first mover's advantage by riding on to the developer's momentum of price increment gearing towards the TOP stage. You would have enjoyed the paper gain of almost $200,000 to $300,000 per unit invested in the newer project, instead of sitting onto an old project which is not making any more additional profits. The age of the property does affect the resale transactions in that particular plot, and we can see very clearly that the newer condos does actually fetch a higher price because of a better layout, of a newer design, better facilities, quality furnishings and finishes as well. And even though that these condos are within the same walking proximity to the same MRT station, you can see that the homeowners or the next group of buyers are always subscribing to newer layouts and newer facilities. Therefore, it actually drives a higher demand for that. Now let's take a look at the condo which is not near to the MRT station within District 19. And I specifically shortlisted H2O residences. And you can see that this historical price trend that in year 2012, when the new launch happens, the price is around $950 per square foot. In year 2015, when it reaches its TOP, that's the key collection from the various homeowners, it has actually gone up all the way to beyond $1,100 per square foot. And that is almost like $150,000 to $200,000 per square foot capital appreciation. And after which, because you knew that in 2015 and 2016, that was also after the slew of all the cooling measures, and the price has become very volatile and fluctuated, but yet you can still draw a horizontal line, which actually means a stagnation, a plateauing line, that the price have actually stayed at around $1,050 per square foot region. There are some of the houses that's transacted above $1,100 to $1,200 per square foot. Now let's take a look at the comparison between H2O residences and this condo, which is known as High Park Residences. And this plot of land is actually further away from the MRT station and even further away from the Seletar Mall and the amenities and the LRT station as compared to H2O residences. Now, as you can see, that High Park Residences is one of the first mega project which houses 1,390 units within the development. And at that point of time, the developer has bought this piece of land from the government land sales at a cheaper rate. And when it was launched in the second quarter of 2015, the developer did not mark up too much for their profit margin as well. But in fact, they actually has sold it at a very affordable rates for investors, even for homeowners and upgraders within the same region. And that actually has attracted a lot of people because of the price entry point of view. And because of such, they actually managed to sell the whole entire projects within that one particular year, which is a record breaking for a mega project. And you can see that when it was launched at 2015, it was already transacting at the same per square foot together with the H2O residences at their resale prices. And slowly actually climbed forth towards the TOP stage in year 2019. And you can see that the price transactions have actually crossed over to $1,250 per square foot, which is in better performance as compared to the resale condo in H2O residences, which is still hovering at around $1,100 per square foot. And along the years up to 2021 second quarter, you can see that for High Park residences, you have hit a record of above 1,300 per square foot, whereas for the H2O residences, the highest record was only 1,200. But you can see that the average median price for H2O residences is still at 1,100 per square foot, which is a vast difference of $200 per square foot region. Very interestingly, I also pull out one of the newer condo, which is still under construction and yet to be TOP, which is known as our Park Botania. And that was launched in year 2018, which is also considering what I call the upward trend or the peaking of the property market back then. And the developer has also priced it sensitively, but is still above the average at 1,300 per square foot range. And you can see that there are already sub-sales happening. Sub-sales meaning to say that these are the resale transactions that's happening before the TOP stage. And it has gone all the way beyond 1,400 per square foot, which of course you can see that is better performing as compared to the High Park residences, and then followed by the H2O residences. Now, having said that, you can see that the price entry during the launch time for Park Botania in year 2018 was way higher as compared to the resale prices of High Park residences and H2O residences. But there are still consumers that are readily entering into this market because they are riding on to the momentum of the developer's pricing. Because we know that once the developer has hit a certain percentile, like 60%, 70%, there's always going to be a price matrix increment. TOP stage, we also know that there will be lesser supply or limited supply in terms of the available units. But those units which are readily available because it has reached its TOP, it also means that it's also higher in demand. Because why? Upgraders are able to sell their current residences and move into the newer development right away. That's when we see the huge demand for a low supply, and that actually drives up the price of the newer condos. And now, as you can see from the bar graphs, for the H2O residences, the average price transaction is hovering around $979, rounding up to about $1,000 per square foot. And the highest price recorded transaction was $1,304 per square foot. Now, for High Park residences, the average price transactions is around $1,034 per square foot. And the highest transaction was recorded at $1,481 per square foot region. Now, as compared to Park Botania, which is yet to be TOP, in fact, they are going to announce their TOP in the third quarter of year 2022 because of a slight construction delay due to the pandemic. But you can see that the average price transactions for the sub-sale is already happening at around $1,314 per square foot. And the highest record transaction was $1,579 per square foot. Now let's look at data analysis. That is not necessary that the condo project fetch the highest price upon the TOP stage. You could be holding on to a slightly longer period. After the TOP stage, then you begin to see the upside potential. Let's take, for example, the Queens. And this is located next to Queenstown MRT station. It houses about 760 plus units, and it TOP in year 2002. And you can see that from 2002 TOP stage and all the way to 2007, the price has fluctuated, hovering at around $650 to $700 per square foot. Because of the inflation in the world's economy, it has gone up very sharply in year 2008. And it crosses over to the $1,000 per square foot. But of course, nobody had foreseen and expected of the world financial crisis due to the collapse of the Lehman Brothers. And you can see that there's a drastic drop within the same year and down to $750 per square foot. At this point of time, we also understood that the world economic recovery barely took around less than 6 months to go back up to a healthy range. In fact, the per square foot region has risen all the way from year 2009 to the fourth quarter of 2013. And Queens has appreciated in terms of the prices to about $1,300 to almost $1,400 per square foot. And that is a very healthy growth sign. And after which, from year 2014 to year 2021 second quarter, the prices has again fluctuated to hover around $1,300 per square foot. And this is also attributed to the fact that there are surrounding newer condos that were being launched in year 2014, 2015 and 2018. Now let's compare the Queens to the newer condo, which is also located next to Queenstown MRT station. It is known as the Commonwealth Towers, and the launch time was around in year 2014, and the average per square foot sold by the developer was already at $1,600 per square foot, which is almost $300 per square foot difference as compared to the Queen's resale prices. From the launch time all the way to the third quarter in 2017, when Commonwealth Towers reaches TOP stage, it has actually crossed over to $1,700 to $1,800 per square foot. And it continues to appreciate from year 2018 all the way to second quarter 2021. And the average prices that's transacting right now is slightly under $2,000 per square foot. Whereas you can see from the Queen's resale transactions in year 2021, it is still hovering at around $1,300 per square foot. Now, if you are an investor or homeowner, if you would have exited the Queen's in year 2014 or maybe in year 2017, whichever the year is, and then you have entered the Commonwealth Towers at the price entry point of $1,600, you will start to see that your profits could have easily doubled within the next course of the 3 to 4 years time, rather than holding on to a resale property which have stagnated from year 2014 all the way to 2021. So having to study the various condos in different regions in Singapore, well, of course, there are inexhaustible data that we can plug out from, but we can actually kind of make some certain conclusions. And in my personal opinion, I do feel that yes, strata-titled properties do have a shelf life. As you can see from this entirety of the data, it is hovering between 8 to 15 years of shelf life, which means 8 to 15 years of attraction to the next group of buyers. And having to understand the shelf life of a property also means that you must have an exit strategy for your property. Before we end, are you taking action right now to review your current property portfolio and assess its performance, whether the money invested in your current property is working harder or it is just sitting there with the CPF accrued interest accumulating? Perhaps it is time for you to take an action right now to review your portfolio and see if there are other investment properties that's out there just for you to reinvest your profits. If you have any burning questions or thoughts after I shared this, please feel free to drop me a line at my mobile number, and I'll be more than happy to answer your questions. And if you wish to obtain a detailed analysis report of the property that you have purchased or currently owning, and you want to find out how the price behavior have worked throughout the years, please feel free to contact me at my mobile number 94557422. I'm Sean In, and I look forward to see you in my next data story.